Yo, my people, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing because on this channel, I always deliver my best. Yes, in this video, I'm going to walk you through how to locate buy-side liquidity in the market. When we say buy-side liquidity, it is an example of external range liquidity. Yeah, so follow me closely as I walk you through. Yeah, so liquidity, as institutions trade, they always leave their footprints, landmarks, watermarks in the market in the form of liquidity. And liquidity simply means money or cash where orders are located. And they are always located at the key levels of interest. That's where price always tends at. Yes, so I'm going to cite some of the examples of buy-side liquidity so that you'll be familiarized with them. Yeah, the first example of buy-side liquidity is equal highs or can be relative equal highs. Yes, the difference is equal highs, as the name suggests, means the two highs are of the same level. And relative equal highs is where two levels are not of the same level. One high is higher than the other high with a marginal pips differential. So I'll take you to the charts so that I will help you to locate these highs. Yes, equal highs, as you can see, looking at these two highs, you will see that we have a relative equal highs here because the right high here is higher than the other high here with marginal pips differential. So this level, I will name it relative equal highs. Yeah, so that's our relative equal highs then. Yeah, you also have another tops here. Let me see whether they are of equal highs. No, these ones two are relative equal highs, or you can also call it relative double tops because the tops are not of the same level. So as you can see, the tops are not of the same level. So it's our relative equal highs or relative double tops formation. Another one too is here, relative equal highs or relative double tops. They are always located at the premium level. Another one is here, relative equal highs. They happen all the time. Yeah, we have another case study here. Yeah, both tops formation and equal highs formation was formed here. Yes, so you could realize as soon as price cleared the liquidity at the equal highs or double tops level, then price got rejected, then bearish. Yes, so that's it. Another relative equal highs was formed here at this level. So it happens all the time, my people. Anytime you spot relative equal highs or equal tops or double tops formation or relative double tops formation, know that price will surely reject at those levels. Now let's get to another example of buy side liquidity. Yes, another important examples of buy side liquidity is double tops formation, triple top formation, or multiple tops formation. So I'll send you to the charts, then you look at it. Yeah. So looking at these levels, you could realize there were triple tops formation here. Let me erase this particular mark there. As price left this high, got retested the second time. After that, tapped some liquidity above the previous high, then made a swing low, went back for the third rejection, then finally it went far below. So anytime you see triple tops formation, know that price will definitely change its direction. Yeah, so we have our triple tops formation there. Let's look at another case study. Yeah, looking at this premium level, we realize there were multiple tops formation here. 1, 2, 3, 4. So 4 rejections took place here. So I will mark it and then name it. So this is our multiple tops formation. Yeah, let's look for more case studies. Yeah, another multiple tops formation happened here, though this side was a little bit higher than the other ones, but it's a typical example of multiple tops. Yeah, we again have another good case study here. As you can see, 1, 2, 3. Price got rejected 3 times at this level. Then in future, it got rejected again at the previous highs. So the whole of this price level was our multiple tops. That is where liquidities were located. Yeah, we also experienced typical case study of multiple tops formation here. Though the tops were not of the same level, they were relative multiple tops. Then after that, price went bearish. So it's like that, my people. So multiple tops, triple tops, double tops, equal highs, relative highs are all levels where liquidities are located. After price has cleared liquidities at those levels, then to get rejected, then price continues whichever direction it wants to go. Yes, so let's get to another example of buy side liquidity. We also have the third example of buy side liquidity, which is PDA, which means premium discounts arrays, which consists of mitigation breaker, flip line, and also known as equilibrium line. They all mean the same thing. Flip line is a line that when support flips to resistance and resistance flips to support. So it's the same as equilibrium line. So these three terms mean the same thing. So I'll take you to the charts, then I'll help you locate these concepts. This one typical example of a flip line or mitigation breaker or equilibrium line, because observing this area very well, this is a line, so observing this area very well, it served as support for price to go bullish. Now let's get to the right side of it. You could see price cross the flip line, and this area now serves as a resistance for price to go bearish. So this particular line is a flip line where support tends to resistance, and then resistance tends to support. And looking at it very well, this is where we had break in market structure. So it's like that. Let's look at more case study. Yeah, this particular zone too was a flip line. Let me draw it well. Yeah, so this particular line served as a flip line for us, because here at this level served as resistance for price to be bearish, and then price rejected the second time, then violated it. Then here price now served as support for price to go bullish. Have you see? So it violated the line here. So this is where break in market structure happened. That's what we call mitigation breaker. The price went below, the future got rejected at the same flip line, then violated it. We are coming to talk about the last case study. Then we call it of observing this particular zone or line. You could realize this level served as resistance for price, and then got violated at this area, and then here the level now served as support for price to go bullish, and then at my far right to again served as support for price to go bullish. So this is what we call a flip line or equilibrium line or mitigation breaker. Now let's get to another example of buy side liquidity. Yeah, the fourth type of buy side liquidity is bearish order blocks. So I will take you to the charts and then help you locate them. As you know, order blocks are last candles before the turning points. Bearish order blocks are always located at the resistance levels. So looking at this side of the market, the last candle before the down move was this black bullish candle. So I'll map it. This was the last candle before the down move. So the whole of this zone was our bearish order block zone. Yes, so let's look at more case study. There we have another typical example here, the dark bullish candle before the downtrend. So the whole of this zone was our bearish order block zone. It happens all the time. Yes, another typical example too is here, the last dark bullish candle before the downtrend. So this zone too was our bearish order block zone. Yes, so my people, it's like that. In the nutshell, these are the four typical examples of buy side liquidity: equal highs, relative equal highs, double tops, triple tops, multiple tops, PDA, which stands for premium discount arrays, which consists of mitigation, breaker, flip line, equilibrium line, and then the fourth one is the bearish order blocks. Yes, so as I said earlier on, buy side liquidity is an example of external range liquidity. Yes, in my subsequent video, I will come out with the sell side liquidity so that you acquaint yourself with them. On this note, I would like to sign out here. See you in my next video. I love you all. Bye bye.